Today, we're talking about the wild week in the market ahead. We're going to touch on the top stocks for Monday's open, and there's still some great buys out there that are undervalued. We'll start off talking about where we are in the market. We'll touch on tariffs, interest rates, the fear and greed index, and then we'll jump into those live trades. Should be a fun video for you here today. One thing I ask, one thing only, make sure to hit that like button down below. It really helps out the channel, and I appreciate each and every one of you. You're certainly welcome to subscribe as well. We're at an all-time high for subscribers, so thank you, and we'll jump into it now. The stock market last week saw the S&P and the NASDAQ both reach record highs before ending the week slightly down. The S&P closed at 6259, down 0.33% for the week, while the Dow and the NASDAQ slipped slightly from their peaks. Despite the pullback, stocks remained near historical highs, supported by strong energy and industrial sector performance. Tariffs were a central theme. The Trump administration extended the 90-day tariff negotiation period to August 1, delaying planned tariff hikes on dozens of trading partners. However, new tariffs were announced, including a 50% tariff on copper imports and threats of higher tariffs up to 35% on goods from Canada and other nations if deals aren't reached. We also had the passage of the One Big Beautiful Bill, and this is set to extend tax cuts and introduce new tax breaks expected to reduce federal revenues over the next decade. We have the start of Q2 earnings season, with analysts forecasting the S&P 500 earnings growth of 4.8%, the slowest since 2023. And looking ahead, markets are focused on upcoming inflation data, including the CPI and PPI. All right, guys, here's the Sector Spider Index to show the different sectors and how they've done over the past 5 days. So last week, you can see financials were down, consumer staples and communication services. We had an uptick in energy last week. And if we look at year to date, pretty much everything is up. The only thing that's flat or slightly down 1% is healthcare. So I do have Eli Lilly on. I think that's a screaming buy right now. But you can see communications up big. Industrials are up big, and tech is now up 10% on the year. The fear and greed index right now is at 75, so extreme greed. And that's when we've got to be careful. And right now I'm looking to raise cash. So only want to be in the best stocks right now due to that. Reports for next week. Tuesday, we've got CPI. So that's going to show us how inflation is. And then Wednesday we've got PPI coming out on the 16th. And the Fed Watch tool, if we look at the CME Fed Watch tool, you can see interest rates right now as of 7:30 are at 4.25% to 4.5%. They're expected to be cut in September, and there's a chance of it being cut in October as well. So they've got two cuts in this year, or no, actually set September, and then expected to stay in October. So one cut in September and then one in December. And then you can see, and that's down to 3.25% to 4%. And then next year, they've got another couple of cuts all the way down to 3.25% to 3.5% through the end of next year. So with that, let's jump into the live trades. The first one that I've got is Adobe. I've got two put credit spreads. And I threw on a call credit spread just to collect some additional money on the downside, but I'm extremely bullish on Adobe. It's trading at 363 right now. My target's 500. And guys, here's kind of what I do. I'll just share with you my option trading tracker, but you can see Adobe right now, the 50-200 day, I'll show you that as well, is down below. So it's not looking good on the chart. So I've got that in red. The RSI, it's oversold right now. So to me, that's a green, that's a buy. The PE ratio is 17 and PEG, so the price to earnings, and then the PEG ratio is 1.18. So super good for a 12% growth stock. This to me is a screaming buy. We're at extreme greed. That's a negative. So, we don't want we want to raise cash, not to have a lot on. The 12-month range for Adobe is 332 to 587. So at 363, we've got a high ceiling. And the last 3 earnings reports, they beat, and the analysts have it as a buy right now. And again, my target's 500. So this is kind of the factors that I use to break down every stock. And then I put my notes over here, the short-term catalyst and the long-term. But, you know, with AI, they can cut employees, 30,000. They've got the best products so far in photo, video editing. I know that they've had 10 straight double beats on earnings. Gross margins of 90%, net margin 30%, legendary. So to me, this is a no-brainer. So that's just, I just kind of wanted to share my strategy and how I work. But if you got some other way that you look at stocks, let me know in the comments below as well. But Adobe, screaming buy right now. You can go to the trade page, curve mode. This is the Tasty Trade option trading platform. So I like this platform. I like this curve mode on it. You can see the profit zone. So as soon as this moves up a little, we're going to be profitable and continue to make money. So Adobe is my first one. What is my next one? ALAB, Astera, Astera Labs. These guys offer the intelligent connectivity platform. So it's a high-speed connectivity platform. And it's utilizing AI. They've got a software suite as well. And these guys are great for the AI expansion. They've had 3 earnings beats, strong buys. They've got 77% revenue growth expected this year and 28% next year to 900 million. So I think it's a screaming buy right now. You can see the chart here. This is the 1 year. I like to look at the 1 year, and then I've got in the green, I've got the 50-day moving average. It's trending up above the 200-day moving average in red. And right now we're at 95, so we're right here. We're right about in the middle of the Bollinger Band, so not a bad time to buy. And if you look at this chart over the last year, this is kind of a pennant or a flag pattern. So this is a very bullish technical indicator. So I like this. My target is 130. We're at 95, so I've got quite a bit of upside that I expect. And yeah, and the chart looks good. So Astera Labs. Next one that I think is still a great buy right now, screaming buy. This is actually one of my favorites, but I've got 3 leaps, and then I've sold short-term calls against it in AMD. So the poor man's covered call, and AMD has done really well for us. It just continues to move up. These guys, let's look at the chart. Yeah, recently you can see the 50 just crossed the 200, and look at this trend up since April. It's going to continue to go up. They've got earnings at the end of the month on the 29th. Right now we're in the upper range, so I don't know if you want to wait for a pullback. I would at least have a small position on. There may not be a pullback, but the PE is 39, the PEG is 0.8, so their growth is so high. It's huge. Actually, let me show you as well on the growth for AMD. If we go to finance, I just use Yahoo Finance, and I'll show you what I look at, the key factors. But okay, here's the chart. I like to look at the 1 year, even look at the 5 year. But you can see right back here, it was at a high of 204 back in March of last year. The 52-week range, that's something I look at, is 76 to 185. But I think AMD is going to 200. They've got a target of 130. Mine's much harder. Mine's 200 plus. And if we go to statistics, you can see the PE, forward PE 39, and the PEG right here is 0.8. And then if we go to the analysis, you can see last 3 earnings beats, revenue and earnings is increasing every quarter. The analyst recommendations have strong buys and buys. So you can see right here that earnings per share trend up, and then the growth estimate 17% the current year, 47% next year. So I mean, AMD is a dominant player, and They've got the MI 350 that's getting ready to come out, and then the MI 400 next year. So they are a lower cost version of NVIDIA, but the MI 350 and MI 400 are very close to NVIDIA's chips. And there's a lot of people that are going to be using them. So the stock's up 41% in the last 3 months, but I still think it's a buy all the way up to 200. And in 2 to 3 years, it's going to go from a $220 billion market cap up to a trillion, I believe. So they're going to have strong guidance going forward. And this is one of my favorite positions. So with that, let's get back to the next one. Next one that I've got on my list is CRM. And I did a video on this one, so you guys can check that out as well. But the two software stocks that I think are great right now are Adobe and CRM. And CRM, I've got two put credit spreads at $10 wide, 270, 260. We're at 258 right now. So if you go to that trade page, you look, we're not in the profit zone. We're in the loss zone. But I'm confident it's going to get up, and then we'll be in this profit range. And then this premium that we have is going to all come in, and we're going to make some money. And if it doesn't, at around 15 to 20 days, I'll just roll these credit spreads to the next month. So from August to September, and likely collect more premium. But I don't see. I mean, look at we've got a lot of support down here. And we had a drop at 258. So we had a competitor come out, a smaller competitor, that brought the stock down. But again, it's oversold right now. That's why I think it's screaming buy right now. But they beat on earnings. They've got 90% margin, 30% net margin. AI Firefly and the Android app are going to kill it. The cloud AI Firefly, I'm sorry, I got mixed up. That's Adobe. That's the other software company. But they've got 90% recurring revenue, just like Adobe. That's what I love about these software stocks. But they've got the Einstein AI platform. Is that right? Yeah, Einstein. But they've got sales agents as well. So I love CRM from here. I'm getting the CRM and the Adobe mixed up, but they're both screaming bias to me right now. Okay, so the next one, Google. Let's see, Google. I've got 3 poor man's covered calls. So a poor man's covered call is buying a leaps option, basically a year out, or I've got a couple that are 250 days. So really, when I get down to 180 days or 6 months, that's when I want to close out. On an up day, I want to close out my leaps, and then wait for a down day, and then throw one on again out near a year. You may even want to go in a taxable account. This is a non-taxable account, but in a taxable account, you may want to keep those leaps on your long-term plays for a year. Talk with your CPA, but you can avoid the short-term capital gains and have long-term capital gains. So you may want to go out, year and a half, and then once they get to a year, you can roll them out further, or you know what, go 2 years and then keep them at least a year. But something to think about. What I do with those leaps, I sell short-term calls against it. So I've got the 185 calls in Google, but we've done really well in Google. I think it's going to continue to do well going forward. I love the chart. There's a double bottom here, and now it's been trending up. We've got the 50 crossing the 200-day, so a huge bullish move. They still have a price to earnings to growth of like 1.3. My target's about 215, so quite a bit higher than where it is now. They beat earnings the last 3 consecutive quarters, and they're a monster in AI. It's a great value right now. They've got search, Android, Waymo, Gemini, a cloud, and I think that the market cap can double, and this stock can double in the next couple of years as well. So I love Google here. All right, GitLab, right after Google. Love this. I've got 3 leaps, and I've got 1 call against it. So it had a big down move. You can see on Friday it was down 6.79%. So I closed out 2 of those. And this is what I do and how I like to trade both sides of the market. On down moves, I'll close out my calls because we make money on those. I made 58 on this. There's 82 left to make. I didn't close them all out. I could have. Normally when I get to 50% on the short call, I'll close that out. So I may close this out Monday and then just play it long and wait for that up move, because I'm confident long term that this is going to move up. It's an open source code development platform for AI, security, and IT operations, all sectors that are growing like crazy. Google invested early and they own almost 4% of the company. And they launched this GitLab 18 with advanced AI, security ops capabilities. And they're just a leader in this field. So let me see what their earnings. I think it's 3 beats the last 3 quarters. All the analysts have strong buys. My target's 70. It's at 42, so almost a double. And the chart looks great as well. Double bottom and moved down. But all the stocks kind of got hurt at the end of last week, the AI stocks. So to me, this is a screaming buy, and I'm playing leaps. It's a low price stock, so it's not real expensive to do that. And when we have a move up next week, then I'll go ahead and throw on some short calls, the other 2 short calls against my 2 leaps, and play it that way. So love GitLab right here. All right. Next one, I told you I love Lilly. I don't think I'm covering that one right now, but if you want diversification, and these guys have a huge pipeline, and I'm still long. I've got 2 put spreads on. Mara, we had a big move up last week in the crypto. MDB is my next one that I'm covering today. I think it's still a great buy. I think it's oversold right now. You can see I'm getting ready to throw on another put spread on Monday. I've got it above the market, but I'm going to go same strikes, 200, 190. So kind of right at the money. And then as long as we stay profitable, I'll be set to make it. Looks like it can make almost $400 on a $10 wide. 390 is where it's set to open at. But these guys are, it's oversold right now. Let's look at the chart. Yeah. And we've got the 50 coming up on the 200, but I think it's oversold right now, definitely. My target is 255. It's trading at 202. It's been up as high as 370 in the last year. So this is what I like. I like that huge room to move up. There was a reason it was up there. And this is the digital backbone for AI apps. And they've got insane revenue growth. Huge runway. The database market for AI, and these guys are the backbone, is a $90 billion market. So love this going forward. And I'll look to put on this new trade on Monday. All right. Marvell, I think, is the next one. Yep. I've got 3 poor man's covered calls. Again, I closed out one of those short leaps last week, and we've still got right here, you can see the extrinsic, EXT. You can see the extrinsic. And I think if you haven't looked, or you want to join or take a look at Tasty Trade, again, great options trading platform. There's a link down below. There's some benefits if you go through my link, but I love how intuitive it is and easy to use. But there's $370 left in the short calls alone to collect at 80, and as long as it finishes below the 80 in the next 33 days. So love Marvell. I'll throw on any up move. I'll throw on another short call. Down move, I will take off these. I'll close out these short calls and take the profit and just wait. But long term, I'm extremely bullish on Marvell, so I'll hang on to those leaps until we get up around 180 days. But you can see right here, double bottom on the chart, and I'm pretty confident this 50-day is going to come up above the 200-day. But Marvell is great. They are strong in custom AI silicon. Their chips are critical for the data center, and yep. So let's move on. The next one that we've got is ServiceNow. ServiceNow is trading at 938. I mean, anytime this thing moves down, I like to go long. I've got credit spreads on. And you can see it's been down as low as 730, but there's a big move down right now. We still have the 50 up above the 200, but they've got earnings coming up, I believe. And this CEO is really good, and they always kill it. But yeah, on the 23rd, so not next week, but the week after, they have earnings. But it's oversold right now. It's been as high as 1,200, and they beat every single time, every quarter. And the analysts have strong buy ratings. But this company's killing it. Another AI company. You can see AI is there's lots of opportunity in it, and those stocks are down right now. These are some other stocks I have on. I think PayPal still screaming buy for me. You can see the chart, double bottom, the 50 coming up. So same story here. And this is a fintech. I love PayPal as well as SoFi for my fintechs. But right now, I think PayPal is super strong. I've taken off some of my SoFi because it's had such a huge run up. But look at that. So I still have my calls. I've rolled my calls up, but yeah, I'm looking to close out because we're at that extreme. I'm going to close out 2 of these. I'm just going to have one on, and keep in mind this is my favorite stock right now, that and AMD. But look at the chart. I'm going to wait. It's going to come back down here, I'm sure, at some point in the 15 range. Stocks don't just continually go up, but when we get up to this area where it's overbought and so much hype right now, I'll wait for a pullback and then load up on it again. So that is the case. Sweet Green is one that I'm looking at right now. I may throw that on there. Just got a few put spreads. I've got to do some more research on it, but at first glance, it looks good. All right, we've got a couple left. Super Micro put spread. What do I have? Oh, I've got leaps, and then I've got calls against them. So 3 leaps and calls. 49 is where it's trading. It's been pretty, wow, a lot of consolidation, and now we've got the 50 breaking out above the 200. So I like Super Micro. And I know that Super Micro has been in the past very high, 12-month range up to 100, so double where it's at right now. Just a short while ago, their chart looks great. The PE is 9, and price to sales is really good. The annual growth rate for next year is 37%. So these guys are leading in high-performance, energy efficient servers that are needed for the data center. So they're kind of a monopoly on that. And they are growing at 40% in the AI server market and trading at 1.3 times price to sales. So this is one of my favorites as well. Supermicro is going to do well. So you could do leaps or put credit spreads or puts if you like those. So whatever you like, I'm long. Tesla, I've closed out some because of the quite a bit going on, but I like Tesla long term. Okay, last one, TTD, the trade desk, and the trade desk is trading at 75, and these guys they power the digital and cloud advertising. So they've got a software platform that allows advertisers to purchase across thousands of websites, apps, and even streaming. A lot of people are ditching their cable bills. I've got to do that. And then we've got Cox, and our bill is killing me. It's what is it, $350 a month or something? But I know there's a better way to do it. And we've got all these mobile phones. We've got like 5 in the family. So we need to consolidate that, and I've got to look at it. So I'm going to be doing that. It's on my list. But the Trade Desk has a cookieless feature. So they've got UID2, and it's an upgrade, and it tracks anonymously and ethically. So there may be there's talk of it being a Congress passing a bill that's going to require that, and that's going to benefit the Trade Desk. But they've been up quite a bit recently, but they're still looking really good right now. Let's see. Yeah. So they've had to move up. We've got the 50 coming up on the 200 day, but 75, what's my target, is 90 for the Trade Desk. And they've been up as high as 140 in the last year. So there we go. Let me know any other trades that you guys have on in the comments below that you think are still undervalued and screaming buys. All right, guys, be sure and download the free options workshop in the link below. Remember to hit like and subscribe. If you like this video, make sure to watch this next one. Leave a comment, ask a question. I answer every one, and I'll see you in the next video.